10-year note yields end the third consecutive week inside of the range, that 2% to 2.14 range. We held it again this week. The market seems to be coiling, alluding to some big event that might be coming up on the horizon. And we have an FOMC meeting next week, so that could be said event. Likewise, we have non-farm payrolls 2 days later. So a lot happening over this next week, and the bond market just sort of waiting patiently for some kind of event or some kind of news that's going to push us either north of 215 or back south of 2%. At this point, I think all bets are looking for a move back north of 215, an area that we have not visited in quite a while in 10-year note yields. So as we kind of head into the weekend, things are sharply unchanged, we call them, week over week as we kind of sit at the middle of the range. And if you look at market implied volatility, well, this week we sort of took away the chances of a 50 basis point cut next week, and the market sort of discounted that. And we saw volatility come off. That was sort of one of those, what we'll call it a what if scenario, the black swan event that the Fed would come in and cut more than expected or would do nothing. And those two scenarios seem to be off the table. Market volatility comes off. We trade the middle of the range. Stocks seem like they're doing very well over in equity land, and that has got volatility on its way back down. Recall, it was hovering right around the 14-day moving average, not seeing any major movement upwards. However, ahead of key events, you typically see volatility bid. That is not the case this time around. And lastly, let's talk about FOMC. What's going to be the big it moment? Well, we get the Bank of Japan meeting on Monday earlier in the week. We get the Fed. We don't get any forward guidance from the Fed this time around. We get a statement which will be printed. Then we get Fed Chair Powell's press conference, which will obviously be taken. It'll probably be a quick read through what he wants the people to hear, and then there'll be a short Q&A, and that will give the market a little bit of guidance in itself. So that will be the time for the Fed chair to maybe talk about patience, talk about data-driven, talk about how they're going to handle this stronger GDP number we got today, along with the low unemployment rate that we've had for so long, and cutting rates, all the same with stocks on all-time highs. So I think it's a very good point for him to leave us with a message there that could take us, because right now the market pricing in a quarter basis point cut next Wednesday, another quarter in September, and yet another quarter in December. So 3/4 basis point cuts, all priced for 75 in this calendar year. And if the Fed wants to put the brakes on that, Wednesday's press conference will be the time to do it. And as I said before, the 10-year note kind of hovering in the middle of the range will be very reactive to what the Fed does on Wednesday, regardless of what the jobs number is next Friday.